Let's take a look at some information charts on MakerDAO for BraveNewCoin. So MakerDAO was one of the earliest lending and borrowing protocols in the DeFi ecosystem. In my opinion, I think Comp and Aave and other protocols have probably taken the lead as far as UI is concerned, especially from Maker. Maker still has a significant amount of TVL. Maker is also kind of being attacked by MIM and Spell right now as well. Partially because much of MakerDAO's underlying is actually USDC. So the decentralization or lack thereof is finally starting to catch up on the narrative to hurt Maker. It's still fundamentally sound. Everything's still great. They do have a governance component, which is probably more important than most coins, but it's not going to move the needle. It never will, unless there's a massive issue that divides the community. Maker's Vault app or Vault creation app is Oasis, and it's almost as simple as Aave and Comp. It's probably still too complex for most average users. It's tough because do you cater to the try-hard legacy folks, the people who understand this stuff deeply, or do you cater to retail, lower capital individuals who can throw, Bernie Sanders style $40 at a time into lending and borrowing stuff? I think the legacy people and higher capital individuals probably appreciate the complexities of Maker more. But in general, I think everyone can appreciate the simplicity of Aave and Comp, at least to me. I don't know. Maybe I'm different than everyone else, but I look at all this and there's multiple vaults, there's multiple stability fees and collateralization levels, and I got to think about what I'm doing with what. Whereas on Aave and Comp, I can just throw ETH into one thing, right? There's 10 things on Comp or whatever, and I just throw it at it, and that's it. Now, Aave and Comp have extremely high liquidations relative to Maker, probably because there are more nuances in things like collateralization levels here than there are on Comp and Aave. So that's a strength for Maker, certainly. I just don't think the masses at large get too deep down the rabbit hole on this stuff. I think they're more in the weeds when they see too many options, the plethora of what do I do? They freeze up, they just go somewhere else, Maybe that's just me. But anyway, it's super easy to do. You just connect your MetaMask, interoperability extremely high. Maker also has a buy and burn mechanic that was introduced fairly late, but has been happening for quite some time now. Part of the reason why this thing spiked in January was because of the buy and burn mechanic. DAI total is actually at an all-time high currently. So DAI itself doing extremely well. It's just I think the other stuff, MIM, Spell especially, is outshining DAI Maker here on the price chart. And if we look at the underlying components of DAI, over 3 billion of it, of the 6.8, is USDC. So that's over 50%, or around 50%, let's say, of the total underlying is another stablecoin, a centralized stablecoin, which to me isn't a big deal as long as people know the information, right? If you're informed, that's all I can hope for. You can make your own decisions. Some people prefer increased decentralization. Some people find the USDC helpful for stability of the stablecoin, of DAI, whatever it is, right? There's a regulatory issue here with USDC being on Maker. If USDC becomes under attack, Maker has a weakness here. There's all sorts of give and take, yin and yang, with USDC involvement or not, but it certainly has helped stability over the past year plus. The Maker burn mechanic, though, has kind of slowed down since mid-year, and that has certainly been felt in price, I think. If you look at when this is being burned versus price, it pretty clearly has a positive correlation there. So if you're bullish Maker, you definitely want to see the burn mechanic start kicking in more and more and more to help price out a little bit. If we look at TVL across everything, it's at an all-time high, 206 billion. If we look at TVL on Maker, it's still number 3 total at 13.8 billion, which is massive. And that's only on ETH. Curve and Aave both have multi-chain components here. I don't think Maker has talked about going multi-chain. I don't think they will. I think they're like Uni, where they're ETH fanboys through and through, which is fine. But that will probably hinder their TVL ever so slightly relative to this other stuff. I mean, Sushi. Sushi's every man's chain, versus Uni, which probably also never goes outside of ETH, right? But still a significant amount of TVL on Maker. And TVL over time on Maker, according to DeBank, still sitting near all-time highs. Borrowing volume, all-time highs, incredibly bullish for the protocol to see that. Definitely, and liquidation volumes, again, are relatively low when you compare this to Aave and Comp, especially in times of massive liquidation spikes. Usually, as a percentage, Maker does much better than Aave and Comp. Oracle calls kind of flat, call contracts kind of flat. To me, that stuff's less important. The borrowing volume all-time high is insane to me to see that. Very bullish for DeFi to see that growth continuously over the past year in borrowing. If we look at the token itself, not a lot of everyday use on chain transaction counts, basically creeping to multi-year lows. It's hard to get bullish on the coin when you see this. Just really just no activity on chain relative to what had been happening, and average transaction values rising substantially as transactions drop. A lot of this is because ETH fees have just been high for quite some time now relative to where they were pre-2021. So if you're bullish Maker, you want to see transaction counts on chain start to pick up. NVT is relatively flat, rising slightly. Active addresses, though, down multi-month, multi-year lows. Not something you want to see if you're bullish. So you'd want to see those creep up again if speculation or whatever picks up over time. Most people aren't moving Maker a lot. You know, I've held Maker for months. I've not touched it. It's just sitting in a trading wallet, right? I don't do anything with it. That it just is what it is. So you're not going to see me popping up here on active addresses or transaction counts. And that's most people, I think, holding a lot of this DeFi stuff. Unless you're using it for AMM or something, you're not going to appear on the on-chain metrics. So it's not going to look, this probably looks more bearish than it is. But at the same time, you want this to curl up if you're bullish. MVRV, which is a measure of market cap versus realized cap, currently sitting at 1. Historically, for Maker, there kind of isn't enough data to really know how to interpret this. Maker was flat for so long, although MVRV did top out at around 2. Then you had a bit of a bear div with rising price, lower MVRV. At any rate, I still think 2 for Maker is a good level for MVRV to watch. If Maker pulls up by some miracle over Q4, I would watch what MVRV gets to. If MVRV gets to 2 plus and Maker's at all-time highs, I would start to get nervous. And if MVRV declines and price keeps going, I would get more nervous. Not based on backtesting for Maker alone, but based on backtesting of all the DeFi stuff. There was what I think is a bear div on everything from February to May on MVRV relative to price. That's something to watch. Buy zone is basically below 0.8. If this dumps and it gets below 0.8 on MVRV, that is a massive buy historically. If you look at the supply of all the stablecoins, there's really been 3 dominant players. Tether, obviously, at 60% or more at times market share. USDC growing 25%. Binance USD at 11%, and DAI at 5%. So something that would help Maker price would be an increase in the market share here. So just more and more DAI in circulation would definitely help the burning mechanic, which should help Maker price. And then if we look at market cap versus annualized revenue ratio, anything with a revenue component, you can look at this. So all the DeFi stuff listed below. And then you can compare one another. And these are all slightly different. There are DEXs here. There are lending and borrowing protocols here. Maker has both lending and borrowing and a stablecoin component. So it's kind of unique in this list. I've said this for a while, but I think Aave and Compound, should the regulators bless it, will eventually have a stablecoin themselves. Why not? Why not just copy the Maker model? But at any rate, to see Maker at the higher end of this curve, it has a 45x multiple relative to its revenue ratio. So compared to everything else, that's abysmal. You know, you're probably going to rather buy Sushi, Aave, or Comp rather than Maker or SNX if you're looking at PE ratio equivalent for DeFi. So you want to see revenue pick up for Maker. You want to see that burning mechanic pick up for Maker. Those are the most bullish catalysts, I think, for price, along with a growth in market share and the stablecoin supply. I don't think on-chain metrics are really going to matter. I don't think governance is going to matter. I don't even think TVL is really going to matter. We can even look at TVL versus revenue. Maker's still kind of at the back of the pack there. So I don't think that's going to matter. Even though it's high on the list TVL-wise, that's not going to move the needle price-wise, I don't think. Looking at Maker USD, it's in a bit of a pickle here. It's in trouble, definitely. It's on the ropes. You've got a death cross on the daily 5200. You are starting to curl below multi-month volume nodes, turning them into resistance. You've lost the monthly pivot, and the next support down is at 1500. No bull div on RSI, no spike in volume, just slow death basically. And probably the worst of all for me is this gnarly looking head and shoulders chart pattern potentially. Bunch of shoulders, bunch of heads, whatever you want to call it. You don't want to lose this diag support, but it looks like it's going to happen based on the death cross, based on volume, based on pivots. This all looks very bad for Maker USD in the near term. It has been below the cloud since early September. So the cloud has told you for weeks, this is a dangerous trade to be in if you're bullish. If you're bullish, you want to see this above 3K. If for some reason this thing pops above 3K, that is a bullish entry according to cloud. But where it sits here, it is the opposite of bullish. If you are bullish maker here, you're hoping that this TKC clamp plays out and this curls back to 3K and you get a Kumo breakout. Otherwise, the expectation here is lower lows, even though momentum looks weak when you see this TKC clamp. It's similar to, I always try to point these out on the same chart, but you'll see these over and over again to varying degrees, and they signal the high likelihood of mean reversion to the Kijun, which in this case would be 3K. So it is bearish, looks terrible, but it is potentially reversing soon. I know that's like up or down analysis, but it's very much an if this then that. If we get a massive stab below current price to new lows, I definitely think it's going to 14.15. If this can hold this level and we curl above 3K, I like 5K. Very much touch and go situation. Maker BTC looks probably one of the worst charts I've seen this week. No bull div yet, no volume yet, below volume support, death cross, losing monthly pivots. It does not look good for Maker BTC. And when I pulled up Maker ETH, I let out an audible gasp. That's how bad this looks. It looks bad enough to buy to me because it looks real bad. It looks about as bad as it did in the same zone, in the same time frame, Q4. Do I know if this is going to pop up in January? I don't. But just based on technicals, this could get pushed all the way down to like 0.55 or less relative to ETH. Continue with this bull div and then have a pop for some reason rotation wise with a mean reversion back to like 1.0 plus. So you're looking for a 2x here, late Q4, early Q1. But I think it's definitely worth adding this to lists and looking at it at least once a week to see what the divs look like, to see if anybody's capitulated, how far down this thing has moved. But these are both very bearish relative to everything else. And this USD pair looks on the ropes as well. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio. I trade for Technical Capital Enzyme.finance, a non-custodial portfolio management tool where you can see everything, including AUM performance, allocation, which vaults we're sitting in here on Comp and Aave. And we're holding a small percentage of Maker here, still 3%, which I think is fair for the current price action. Looks very bad. And you can also see the trades in the trades tab down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.